Tonight, we're going to receive a report on our comprehensive annual financial report. We have Judy Dockendorf and Linda Bowie-Schmidt from Deloitte. And I will have Jessica Wojon, our finance director, kick it off for us.
Good evening, Mayor and Council. This is our annual working session for the city's annual report. The council for this meeting serves as the audit committee, and our auditors have some required communications that they'll share. So we have with us Judy Dockendorf and Linda Schmidt from Deloitte to present.
Thank you.
No.
Okay. All right. So thank you. We are happy to be here with those of you in person and everyone else online today. We're excited to see everyone. We'll be presenting the results of the audit and walking through some of the financial information as well for the city for 2020. You should have the large consolidated annual financial report. It has the nice, pretty picture of the City of Winona on it. And then you should also have a presentation from Deloitte, which I think we're going to share. Perfect. So we'll walk through these kind of in conjunction with each other, and we'll point you to certain pages of your big financial report as we talk through various parts of the results for 2020 and talk about our audit procedures. So Linda's going to start walking through a few of the items from our slide presentation just on the results of the 2020 audit.
All right, thanks, Judy. On slide 5, I'll just highlight our scope and kind of what our opinion covered. So we were engaged to perform an audit of the financial statements or the comprehensive annual financial report, which we opined on, and we issued an unqualified opinion this year, which is a clean opinion, and it's included on page 13 and 14 of the report. And then I'll also note that on page 25 and 26, government-wide financial statements includes information for the Port Authority within a separate column. So that's a discreetly presented component unit, which has been audited and covered by our opinion as well. And we'll issue a review report on the Port Authority similar to previous years in the June 10th Port Authority meeting. And then next, I will go into more details in a couple of slides. But for the 2020 year, a single audit or a compliance audit over federal expenditures was required, given the city expended more than $750,000 in federal expenditures. Just quickly in the audit approach, we on slide 5 still. Yeah, our procedures included performing control walkthroughs over key processes, so cash, fixed assets, financial close and reporting process, and tested any judgments and estimates such as pension and other post-employment benefits. And then we tested specific account balances for funds in scope and ensured that the appropriate standards were followed. And then slide 6 here, management override of controls. So this is a focus area for the audit, but it's also, for all of our audit clients, given its pervasiveness and the unpredictable nature of it. So to address the management override of controls risk, we tested journal entries, and then we just ensured that, for each entry, there is a business rationale for each one and ensure that there's no management bias. We also performed fraud inquiries with key management and ultimately determined that there was no evidence of management override of controls. And slide 7 here covers the Uniform Grant Guidance Compliance Audit, or a single audit. So like I said, it's required when an entity expends more than $750,000 of federal expenditures in a year. The last time one was required was in 2017. And then if you go to page 138 of the report, it shows the schedule of federal expenditures with a total of $5.3 million. And just this year, since there hasn't been an audit in the last 2 years, City of Winona is automatically deemed a high-risk auditee, but that only comes into play when we as auditors need to achieve 40% of coverage when we make our grant selections. The 2 we actually selected were the coronavirus fund and then the construction fund, and those made up 76% of the total expenditure. So we had plenty of coverage there. But for each program, what we did was we tested controls and specific compliance requirements that were direct and material to the program. So for instance, for the coronavirus fund, we made sure that the expenditures were related to police and fire salary. And so nothing complex there. And then for Riverview Drive, just that the invoices and expenditures were related to the construction. So we made sure that they were allowable and in accordance with grant agreements. But yeah, other than that, through our testing, we didn't identify any findings, non-compliance or deficiencies. There are no questions there. Go ahead, Judy.
All right. So what we're going to do next is kind of flip through some financial results. So in conjunction with your big consolidated financial report, we'll walk through some additional information from a financial perspective. And maybe if I just step back for a second, just on your large financial report, kind of the first section there, so your pages 1 through 9, this is what's called a transmittal letter. So something that's put together by the finance department, tells a little bit of a story about the city and gives you some guidance on just what's in the following 200 pages of information. So helps you to kind of know what you're looking through and what you're going kind of page by page through. On page 11, you have an organizational structure. And page 12 gives you information on city leaders as of the end of the year. So dates that individuals were appointed or elected and what their terms are. And then highlights as well some of the key city staff. So basic information about the city is kind of in the front of the financial or of your large report. Then you'll see at pages 13 and 14, as Linda mentioned, is our audit opinion from Deloitte. So as Linda mentioned, this is an unmodified or a clean opinion. It's the highest level of an opinion that we can give. And that opinion is on the governmental and business type activities, as well as the port authority from a component unit perspective, the major funds, the aggregated non-major funds as well. So comprehensive, it covers all the stuff that's in the back here. And then if you move on to page 15, this is management's discussion and analysis. So this is going to give you just more background on financial results for the year and different transactions that have occurred that are highlighted here for you to understand the activities of the city. And then if you moved to page 25, this is where the basic financial statements start. So we've got a number of pages we'll start to walk through here. And then following the financial statements are the notes to the financial statements, which are pages 41 through 88. So that's really covered by our audit, but I just wanted to kind of give you an overview of the structure of the comprehensive annual financial report for those of you who haven't seen it before. And now we'll walk through a little more detail on financial highlights. So if you could go to the next slide, or slide 9. So slide 9 here is a snapshot of the net position for governmental activities at the end of 2020 and 2019. This is derived from page 25 of your big financial statements. So you can see the net assets, or excuse me, the net position breakdown at the bottom of page 25. And here's just a snapshot you can see for governmental activities, about a $4.8 million overall increase in net position over 2019. And that your significant portion of that net position is the net investment in capital assets. If you go to the next slide, this is going to give you the same information, the net position, but for the business type activities. So we're in the second column now of page 25. And again, here, your significant portion is going to be the net investment in capital assets, as well as your unrestricted net position. And for the business type activities, there was about a $0.7 million increase from 2019 in the overall net position. So good that it's positive. We had net income essentially for 2019 for the business type activities, but not as significant of an increase as you saw on the governmental side.
And business type is sewer, water, wastewater,
Yes,
inspections.
go ahead, Jessica.
Sewer, water, inspections, library and recreation, and storm sewer.
Okay. Just because, again, we got new council members, new mayor, so.
Yes, no, absolutely. I would, and we should have made this maybe more clear at the beginning that this is really for you as council members to have this overall understanding of what happened during the year. So certainly as we're flipping through or you're looking at your financial statements, let us know if you do have questions and we'd be happy to walk through them and answer them, or have Jessica and Steve help us answer those as well. It's hard to see if anyone online has questions. Okay, if you could go to slide 11 then. So you can see here, this is really what's your income statement. And you can see at the very bottom is that 4.8 million we saw net position increase by for governmental activities a couple slides ago. So we're getting there by starting with governmental expenses and then taking out revenues that we've generated. So charges for services and various operating and capital grants and contributions that have been received. And if you look at the operating and capital grants, so the third and fourth lines here, you see a rather significant increase from 2019. And that's those grants that we tested through the single audit that are really driving, it's the coronavirus relief fund, the reconstruction fund, those federal and grants and contributions you received in 2020 that maybe weren't there in the past, primarily due to the pandemic. And then you've got some additional revenues. Pretty consistent year over year there. And so you then see your increase overall of the 4.8 million.
Could I ask a question on that slide, please?
Yes.
What is the, why was there a sharp reduction in interest and investment earnings between 2020 and 2019, a substantial decrease? About a $550,000, $560,000 decrease. Interest and investment earnings, what is that?
This is Jessica. That decrease in investment earnings is just due to low interest rates primarily.
Okay, that's a huge percentage reduction. Did we? Okay, I'm sure that's correct, but that just surprises me at what a large reduction that is.
Yeah, it was a large decrease in the interest rates.
Okay.
And this information on this side is derived from page 26 of your consolidated annual financial report. If you want to move to the next slide, thank you. So here, this is just again derived from the information on page 26. So some additional, what we would kind of call income statement activity. But you can see here really revenue breakouts and where revenues are driven from year over year. And again, primarily as a percentage, you can see that your capital grants and contributions and operating grants and contributions are a more significant percentage of revenue dollars in 2020 than they were in 2019. And then if we move forward, thank you. And then this is just a similar look, but at expenses. again, derived from page 26 of the consolidated financial report. And I would just highlight kind of the notes at the bottom of this slide. So approximately 34% of governmental expenses were funded by property taxes, and approximately 40% of governmental expenses were funded by local government aid. And you can see a slight increase in the total expense amount year over year of 22.5 million in 2020 as compared to 21.3 million in 2019. Slide 14, what we like to do here is just give a little snapshot of some of the different funds that we look at and really how do these funds cover their expenses. So the information here is derived from pages 34 and 35 of the CAFR, or your large financial statements, where there's actually an income statement for each fund. So you can see that from an operating perspective, the water fund generally can recover all of its expenses through operating revenues. So you've got a positive operating income ratio. The sewer fund typically is able to cover its expenses through its operating revenues, although in 2020, they did see an operating loss. And then if you look at a recreation fund or a library fund, typically from their normal ongoing operations, they're not able to cover their operating expenses, but that's where grants and aid come in and pick up some of the slack there to get those into a more favorable position when you look at the total change during the year. Jessica, I don't know if there's anything else you'd add on some of these enterprise funds.
In 2020, we did have a decrease in revenue for water and sewer, sanitary sewer, due to a decrease in consumption related to COVID. When the universities closed or started providing classes remotely, that reduced a lot of the consumption here in town. And so the water fund, the water department was able to reduce their expenses enough to help compensate for that, but the sewer department was unable to do that.
Okay, so the next slide we have, if you want to go to the next slide. So this information here is derived from pages 164 and 165 of the CAFR. So we're going to get into a little more information, and in the back, there's a statistical section. So there's a number of tables back here that start overall on page 141. And that give you different information on financial trends, revenue capacity, debt capacity, demographic information, operating information, pension information. So there's just a number of tables back here that, depending on what you're looking for, you can come back to these back statistical sections, get an idea of what's going on. And many, if not all of them, actually have 10 years of historical activity. So you can look at trends and do some analysis there to see, if you might be, whatever it is you might be interested in. But these are unaudited. We do obviously agree them to supporting information that the finance department prepares, but they aren't audited by us. But we do read them obviously and make sure they're consistent. So the slide that we're on, slide 15, just gives you some information on actual value of property and tax capacity. And like I said, it's from pages 164 and 165. And I think, the conclusion here is just really, you continue to see a good annual percentage change in the market value, with the latest being a 4.6% increase.
Could I ask a question on this slide?
Yes.
And I'm sorry if these are basic questions, but I need to try to get this concept of tax capacity. Is that the tax collected That's what's, so if we look at 2021 total estimated tax capacity, 22,582,000. That's what was collected. Is that right?
This is Lucy. The tax capacity is not the amount of property tax collected. It's a valuation of commercial and residential. They're taxed at different rates. So if you multiply the value times the capacity percentage, that comes up with the tax capacity number.
Okay, so we didn't necessarily collect the 22.5 million.
Right.
So how much of that capacity did we collect? I'm trying to figure out all the numbers here. We've
They're digging, Steve.
Okay.
They're looking right now. They're
Okay.
getting
And
at it.
if I should do some of these questions offline, that's fine, but I'm just trying to get all the pieces. We've got a 1.9 billion. Yeah, that's right. 1.9 billion estimated market value, and that's the estimated market value of business and residential in the city limits of Winona. And we have an estimated tax capacity of 22.5 million. How much do we actually collect?
So in 2020, we collected $8.9 million for property taxes.
So help me understand this concept of tax capacity.
That's the value that is used to calculate what the tax is.
You said the tax was 8 million.
That's the tax collected.
Okay.
And you're
So-
looking at the estimated tax capacity, and that's the amount that it's multiplied by the rate, depending on what type of, if it's a business or if it's residential. That's what the tax capacity is, what's used to calculate what we will be collecting in tax revenue.
Is that the maximum that could be taxed? Is that what that represents?
Lucy, do you want to
Yeah.
step in with?
Right, sure. So if you have a $200,000 commercial industrial building
Mm-hmm.
and a $200,000 residential building,
Mm-hmm.
because commercial industrial has a tax capacity of 2%, they will pay more property taxes than the residential.
Okay.
So if you think again of your home that you live in versus a rental property, they're taxed at different percentage capacity rates.
Mm-hmm.
So the tax capacity is a makeup of taking all of the estimated market values times the tax capacity rate to give you your overall tax capacity.
If the tax capacity is 22.5 million for 2021, how come we only collected 8 million?
It's not a measure of what we collect in property tax revenue. It's a valuation that's used to describe the makeup of our property.
Okay. Okay. This will sink in, and I'll get it one of these days. I'm closer. I think that maybe a phone call to Lucy at some point, or Jessica. I'm close. Thank you.
Sure.
The next slide is just some productivity measures. These are derived from, again, some of the statistical information in the back pages here. You could go to the next slide. So the information here on the pension plans. So they're both general employees as well as public employees, police and fire, participate in state of Minnesota pension plans. These are actually disclosed in footnote 6, which is pages 61 to 68 of your financial statements. And don't blame the auditors for how long pension disclosures are, because we feel they're more than sufficient as well. But here's just some information from a funding perspective. These plans, as I said, are administered by the state of Minnesota. So when the city goes to do their accounting and recording their portion of the liability and their expense amounts, this is all driven by a valuation that's done by the state of Minnesota's actuaries. So the city here is not setting any of the assumptions, the discount rates, long-term rates of return, any rates around demographic information, healthcare cost trend rates. None of that's set by the city. That's set by the state of Minnesota when they do their actuarial analysis with their actuary. But the city does record their portion of the liability and expense numbers in the financial statements. And really, I think here is just to, you can see the funded ratio continues to be relatively high here. You're close to 80% on the general one, and obviously almost at 90% on police and fire. So a well-funded plan, but it is all administered by the state of Minnesota. And then the next slide has information on the retiree medical benefit plan, or the post-retirement plan. You can see an increase of a little over $1 million year over year in the liability. That's primarily driven by a decrease in the discount rate. There's additional information in note 13 of the financial statements, which is on pages 77 to 79 of the report. And the city does a full valuation with their actuaries on an every other year basis. So 2020 was a full valuation year. The city provides census information, goes through some of those assumptions, discount rates, rates of return, various demographic trend type rates, works with the actuaries to determine what the value, what that liability should be. And while there aren't specific assets set aside for the plan, you can see that there are general assets set aside at about $2.8 million. So just a little bit less than the amount of the liability that was recorded at the end of 2020. Before we continue on in the slide presentation, a couple of the other statistical sections we thought might be of interest to members of the council. The next one would be page 168. So this is going to be the principal property taxpayers. And what it's showing you is the top 10 companies here for 2020, and then basically a look back 10 years ago as to who were the top principal taxpayers. And you can see here that, currently, as well as 10 years ago, you've got 10 top taxpayers that really are just covering, 10 to 11% of the total tax capacity. So some good diversity here and a number of other taxpayers providing some of that additional 22.5 million of the tax capacity.
And this is one item that Moody's points out every year when they're doing the bond ratings, that as a strength for the city of Winona, that we have such a diverse tax base.
Yeah, George here with a comment.
Go ahead, George.
Yeah, I think we're very fortunate, as just mentioned, that we have such a diversified tax base, especially with our industries, because we go from light manufacturing all the way up to very heavy manufacturing and trucking industries. And it's not like, some communities where 3/4 of your town works at one place. And we're very, very fortunate to have this diversified industry in our town. Thank you.
The next table would be page 182. And this is going to be your principal employers. So seeing some of the same companies, but some different ones as well. And again, just really good diversity here that, you know, your principal employers really just make up 21% of the total employment. And again, a comparison of 2020 and then back 10 years. And then the last table we thought might be maybe of more interest is just the next page, page 183, which has property values and construction for the last 10 years. And you can see for both non-residential and residential construction, I mean, you can see a significant increase in residential permits over the prior year, as well as the value there, and some really continued high numbers on the non-residential side in 2019 and 2020.
And those high non-residential construction items are have a lot to do with the continued development downtown and Cotter Schools and St. Mary's in 2020.
So those are the items we wanted to highlight from your 200 pages of consolidated annual financial report. So if you get bored and want some additional reading, feel free to flip through and ask questions. I will now go back to the slide presentation. And slide 20, thank you, just talks about new accounting standards. So I think, you know, from an audit perspective and a finance department perspective, the Governmental Accounting Standards Board gave everyone a break with the COVID-19 pandemic and did not issue significant new accounting standards and actually delayed implementation of some of them. The largest accounting standard that's coming up for the city is the leasing standard. This is going to take leases that previously you only saw the expense portion come through as that expense was incurred. Those leases are now going to go onto the balance sheet. So you're now going to have an asset, a leased asset, and a lease liability as well. So the city right now is working to understand, you know, what's out there that we have leases for and inventorying those to then determine what amount would need to be recorded on the financial statements. And we have a couple years yet before it's effective, because it is a lot of work to just understand, you know, where are people making monthly payments that really are leases that we need to make sure we inventory and then get onto the financial statements as applicable. The next slide, just as everyone is aware, we did our audit procedures all remotely again this year. As I mentioned earlier, we're certainly happy to be with those of you we are here with in person today. I do think it makes for a more effective meeting process, but we had no issues as we performed our audit procedures and access to what we needed from a testing perspective. Appreciated the IT help in getting access to what we needed, and working with Jessica and her team in the finance group was great. We would, you know, set up a Zoom call if needed. We would trade information through what we call Deloitte Connect, which is a secure online portal where Jessica and her team can upload the information we're requesting, and then we can access that. Slides 22 and 23 really just provide some information around best practices. Jessica, I'd maybe just highlight if there's anything there you wanted to highlight for anyone on the council.
So I would just highlight that the very significant items for the best practices relate to having a strong fund balance and working capital reserve policy, and the debt affordability reviews and policies. We do have a really strong debt ratio. That was another item that Moody's comments on each year is we have such a low debt per capita for our citizens.
It's also repaid relatively quickly too, right?
is,
You're at a 10 to 11 year, maybe at most outstanding on your debt offerings, which is great.
George here with a question.
Go ahead, George.
What is our debt per capita right now?
That page
Our-
173. Total general obligation debt per capita is 244.
Thank you.
Steve here with a question.
Go ahead, Steve.
Can any of you comment on the fund balance reserve policy? Have we had any significant changes to that in the past year or so? Do we see that holding steady, or are we approaching any of that differently?
we haven't had any significant changes to our fund balance policy.
Okay. We've made good progress. It sounds like we got an A+ on that, and I just want to hope we continue with the A+. So thank you.
Thanks, Steve.
If you can go to the next slide, or slide 24. So this is just, a heat map to help you really just consider, where risks are and the impact of what some of these risks can be on the city. There's nothing I would specifically call out here, but if there's anything, Jessica, or
I guess I would just point out that I think that this past year, we've done an excellent job with our cybersecurity training. Brad has done training with each of the new hires within the city, and he continues to provide training bi-monthly throughout the city to employees, and I believe also council members, including our part-time temporary employees.
I'll move then into the appendices quickly here, and then we can take time for some questions as well. If you could move to slide 27, please. Thank you. So here really just, from an accounting estimate perspective, the significant estimates we look at are the post-employment benefit obligation, which we talked about, which was in note 13, and then the pension plan liabilities, which is in note 6. We go through an analysis to understand how the city goes about establishing those liabilities and what judgments might be used and estimates might be made. And then on both of those, we actually involve actuaries from Deloitte to take a look at the assumptions, make sure they're reasonable, make sure the disclosures are appropriate. And we found no issues with any of the accounting estimates that we looked at. And then from a significant accounting policies perspective, this is disclosed in note 1 to the financial statement. So note 1 is a little bit longer. It walks through various accounting policies across the board, cash and cash equivalents, investments, fixed assets, the estimates we just talked about. And during the year, there were no significant changes in any of these accounting policies, which we would not have expected. We can move to the next slide. Thank you. And the first item here, there were no uncorrected misstatements identified during the audit. So obviously a lot of work by the finance department, a lot of work by our audit team during the year. And actually, as we go through the year, we had discussions with both Mary prior to her retirement and Jessica as things may come up during the year, transactions might come up and what's the right accounting there. So we have good collaboration as needed as questions come up. And as the result of our audit procedures, we had no uncorrected misstatements. We do request management representations. These are included as Appendix D. There were no significant changes in any of the representations we requested from management as compared to the prior year, and everything we did request was received. So in your PDF copy, you do have a copy of the signed management representation letter. Then page 29, if you could go to the next slide, thank you. Again, we received great cooperation from the finance department. We met with the mayor and with the city manager during our procedures. It was done remotely, but we did that via Zoom. Had great cooperation as we performed our procedures, made selections, needed detailed requests. So we certainly appreciate all the hard work. We know it's not easy, and hopefully we'll be able to see everyone in person next year for the audit. And then really just, no significant changes in previously adopted accounting policies, as I mentioned, no scope restrictions or limitations on our access to anything, no major issues discussed prior to our retention. To our knowledge, no consultations with other accountants, no disagreements, and no significant difficulties encountered. It was actually our second year doing a virtual audit, so we're getting pretty good at it. But like I said, hopefully we'll see everyone in person for the 2021 audit. And Appendix B just gives you communications of our peer review results. This is slide 31. We actually at Deloitte get audited as well. So Grant Thornton does that audit every 3 years. And they issued a peer review rating of pass. It's either a pass-fail audit report, and that was issued in 2020 and can be found at the link that we've provided here if you'd like to see that. Pretty short, it's about 1.5 pages. It's not 200 pages. And then Appendix C is just that we can confirm to the council that we are independent of the city. And Appendix D, as I mentioned, is your representation letter. So we wanted just to leave a little time if there were questions, either anything audit specific, or if you've had time to kind of page turn your 200 pages, if there was anything else in the financial statements that anyone wanted further clarification on.
Any other questions at all? Okay, and once again, thank you so much for coming in. Jessica, thanks to your team for the hard work this year. Really appreciate it. So thanks for coming down.
Yeah, thank you. We appreciate being here.
And we'll adjourn and we'll get back together at 6:30 for the council meeting. Thank you.